Turkey has had a turbulent history of economic growth and decline. Turkey was once considered one of the top emerging economies of the century, with a dynamic and diversified economy, a large and young population, and a strategic location between Europe and Asia. However, today, Turkey is facing significant economic challenges, including high inflation, rising debt, a declining currency, and political instability. Inflation rates have reached record highs, with prices of basic goods such as food and fuel increasing dramatically. Turkey's currency, the lira, has depreciated significantly against major currencies like the US dollar and the euro, making imports more expensive and leading to higher inflation. The Turkish government has attempted to address these issues through a combination of monetary and fiscal policies, but their efforts have been met with mixed success. The government's decision to increase interest rates has helped to stabilize the lira, but it has also slowed down economic growth. In addition, Turkey's large and growing debt burden has made it increasingly challenging to finance government spending. So, what exactly has led to Turkey's current economic woes? One major factor is political instability. Turkey has faced a series of political crises in recent years, including a failed coup attempt in 2016, which has undermined investor confidence and led to a decline in foreign investment. Turkey's relationship with the U.S. has also been strained due to various geopolitical issues, including Turkey's decision to purchase a Russian missile system. Another significant factor is Turkey's reliance on foreign borrowing to finance its current account deficit. Turkey has been running a significant trade deficit for several years, meaning that it imports more than it exports. To finance this deficit, Turkey has borrowed heavily from foreign lenders, primarily in the form of short-term debt. However, this strategy has become increasingly risky, as rising interest rates and a stronger dollar have made it more expensive for Turkey to service its debt. The situation in Turkey has the potential to turn into a global conflict, with implications for the U.S. and the wider global economy. As Turkey struggles to manage its economic challenges, it may turn to more aggressive policies to protect its interests, such as imposing tariffs or restricting exports. This could lead to tensions with other countries, particularly those with which Turkey has significant trade relationships. There are multiple factors that have contributed to Turkey's economic struggles, including a decline in foreign investment, high levels of external debt, political instability, and poor monetary policy decisions. One of the main issues is the ongoing conflict between President Erdogan and the Central Bank of Turkey. Erdogan has been pushing for lower interest rates to boost economic growth, but the central bank has been hesitant to comply, as it would risk further inflation. This disagreement has led to a lack of confidence in the central bank's ability to stabilize the economy, further driving down the value of the Turkish lira. Furthermore, Turkey has been grappling with political turmoil for years, which also had a negative impact on its economy. Erdogan's government has been accused of corruption, censorship, and human rights abuses, leading to a decline in foreign investment and a lack of trust in the government. Additionally, Turkey's involvement in conflicts in Syria and Libya has further strained its economy, as it has had to divert resources and funds to these endeavors. Despite these challenges, there are potential solutions to Turkey's economic struggles. First and foremost, there needs to be a restoration of confidence in the government and central bank. This can be achieved through a commitment to transparency, accountability, and the rule of law. Additionally, there needs to be a focus on reducing external debt and attracting foreign investment through incentives and improvements in infrastructure. Finally, there needs to be a reassessment of monetary policy decisions and a willingness to make tough, necessary choices, such as raising interest rates in order to combat inflation and stabilize the economy. If Turkey's economy continues to spiral out of control, it could potentially lead to global conflict and drag the U.S. into it. Turkey is a key player in the Middle East and a NATO ally, and any economic instability could have ripple effects throughout the region. As such, it is imperative that Turkey takes the necessary steps to address its economic struggles before it's too late. It is important to understand that Turkey's economic boom in 2018 wasn't just a fluke. It was the result of years of government policies designed to promote growth and modernization. President Erdogan's government had implemented a series of economic reforms, including privatization, deregulation, and investment in infrastructure that helped to attract foreign investment and stimulate domestic growth. Turkey's strategic location between Europe and Asia also made it an ideal hub for trade and commerce. However, the seeds of Turkey's current economic crisis were also sown during this period of rapid growth. The government's expansionary policies and low interest rates led to a surge in borrowing, both by businesses and households. This fueled a boom in construction and real estate, but also led to a buildup of debt that is now weighing heavily on the economy. In addition, Turkey's reliance on foreign investment and financing left it vulnerable to external shocks, such as changes in global interest rates or investor sentiment. Moreover, Turkey's economic growth in 2018 was not inclusive, with the benefits largely concentrated among the urban elites and large corporations. Income inequality remained high, and the government's crackdown on dissent and opposition groups raised concerns about the erosion of democratic institutions and the rule of law. These factors contributed to a growing sense of social and political discontent among many Turks, which has only intensified in the face of the current economic crisis. Overall, while Turkey's economic growth in 2018 was impressive, it was not sustainable in the long term. The government's policies and priorities did not adequately address underlying structural issues, such as the country's dependence on imports and energy, and the need for more diversified and innovative industries. The current crisis, while painful, may also provide an opportunity for Turkey to undertake much-needed reforms and address these deeper issues in order to build a stronger and more resilient economy for the future. The nation can barely keep a lid on its inflation rate, which has soared up as high as 58%, according to the official count. Unofficially, though, the actual inflation is reported to be over twice as high, and that's hitting the citizens hard. Couple that with a currency that has seen better days, and what we have left is an economy that is struggling to stay afloat. Turkey's economy was heavily dependent on foreign investments, and Erdogan's policies led to a loss of confidence from foreign investors. This, combined with the country's large current account deficit, created a vulnerability to currency fluctuations and increased borrowing costs. In addition, Turkey's political instability and human rights concerns have also contributed to the lack of confidence in the country's economy. Another issue is Turkey's reliance on imports, particularly for energy and raw materials. As the value of the Turkish lira decreased, the cost of importing these goods increased, contributing to the country's high inflation rate. The COVID-19 pandemic also had a significant impact on the economy, as it did globally. Turkey's tourism industry, which was a significant contributor to the economy, was hit hard by the pandemic, leading to a loss of jobs and revenue. Furthermore, Turkey's international relations have also played a role in the country's economic struggles. Turkey's strained relationship with the U.S. has led to economic sanctions, which have further hurt the economy. Turkey's involvement in regional conflicts, such as in Syria, has also led to increased military spending and instability in the region, which can further impact the economy. Overall, a combination of factors, including government policies, foreign relations, reliance on imports, and the COVID-19 pandemic, have led to Turkey's economic struggles. It remains to be seen how the country will recover and whether the government will take the necessary steps to address these issues. Turkey's heavy reliance on foreign debt to fuel its economic growth was a double-edged sword. While it provided a much-needed boost to the economy in the short term, it also created a vulnerability that Turkey is now struggling to overcome. The massive external debt of nearly $500 billion has made Turkey heavily dependent on foreign investors and lenders, making it susceptible to changes in global economic conditions. With the value of the Turkish lira plummeting, servicing the debt has become increasingly difficult, and Turkey's credit rating has taken a severe hit. This has further increased borrowing costs, making it even more difficult for Turkey to pay back its debt. Another issue that Turkey is facing is the reluctance of Erdogan's government to raise interest rates. Inflation has been soaring, and the value of the Turkish lira has plummeted, but the government has been hesitant to raise interest rates, which is one of the key tools for controlling inflation and stabilizing the currency. Erdogan's preference for keeping interest rates low is a misguided attempt to boost economic growth at the expense of price stability. However, this has led to a vicious cycle, where high inflation is leading to lower investment, lower growth, and further currency depreciation. The central bank has been under pressure to raise rates, but its independence has been compromised by Erdogan's attempts to control it. This has eroded the credibility of the central bank, which is essential for maintaining confidence in the economy and attracting foreign investment. In conclusion, Turkey's economy is in big trouble, and it's unclear how the situation will develop. The nation's citizens are suffering from high inflation and a weak currency, and the government seems unable or unwilling to take the necessary steps to fix the problem. If the situation continues to worsen, it could potentially turn into a global conflict, with the U.S. being dragged into it. We hope that Turkey can find a way out of this crisis and emerge stronger and more resilient. Be sure to like this video, subscribe to our channel, and enable notifications for more informative content about today's economy from all over the world. Until next time,